Okay, so hello my dear students, welcome to another discussion for accounting for derivatives and hedging or hedging foreign currency transaction. Okay, so let's start our discussion with a definition of a derivative. So what is a derivative? So derivatives are financial instruments that derive their value from the changes in the value of some underlying. So what is an underlying? So these are the rates or prices that relate to the asset or liability underlying the derivative instrument. So example of underlying are exchange rates, interest rates, stock prices, and commodity price. So ano yung common with these exchange rates, interest rates, stock prices, and commodity price? So what do they have in common? Okay, so their value changes over time. So therefore pabago-bago ang value ng underlying. And since the value of the derivative depends on the value of underlying, that's why nag-change din ang value ng derivative depende sa value ng underlying. Okay, so a derivative, being a financial instrument, normally includes a notional amount. Okay, so a notional amount is the total face amount of the asset or liability that underlies the derivative contract. Okay, so it is normally expressed as a number of units, such as a number of foreign currency units, or quantity, such as Basel shares or pounds, that or other units specified in the financial instrument. Okay, so also a derivative requires little or no initial investment, okay, because it is an investment in a change in value rather than investment in the actual asset or liability. So it shall be noted that the cash payments involved are made at the end of the contract. Okay, so kaya nga it requires little or no investment kasi the payment is at the end of the contract rather than at its inception. Okay, so also a derivative instrument does not require delivery. So generally the parties to the contract, the counterparties, are not required to actually deliver an asset that is associated with the underlying. Okay, so what are the types of derivatives? So basically the types of derivatives are, the common types of derivatives are forward or future contracts, option contracts, and a swap agreement. So let's discuss it one by one. So a forward contract is actually a contract to buy or sell a specified amount of an asset at a specified fixed price with a delivery at a specified future point in time. Okay, so basically a contract gives a forward contract gives the holder the obligation. So take note, it's a obligation to buy or sell a specified amount of asset or a specified amount of an asset at a set price. So specific price or set price na giset at a future date. Okay, so meaning to say, if an entity entered into a forward contract, so hindi na siya pwedeng mag-back out, kasi of course, kasi obligation niya yan obligation niya, or may obligation ng entity to buy or sell specified amount of an asset in the future time. So kasi ang mangyari if hindi ituloy, so there will be breaches of contract. So yun siya. So we also have option contracts. So option contracts naman, it represent a right rather than an obligation to either buy or sell a quantity of a particular underlying. So as compared to forward contract, so an option contract is a contract that gives the holder the right, okay, but not an obligation. Kasi di ba sa forward contract, it's an obligation to buy or sell a specified amount of an asset, okay? But here in option contract, you have right lang, no, but not an obligation, no? To buy or sell an asset at a set price at a future date, no? So, pwede, no, na di mo ituloy yung contract, no, or ituloy or hindi ituloy ang contract, no. So yun nga, no, so may choice ang entity na ituloy yung contract or hindi. So of course ituloy niya. So normally the entity will push through with the contract if it's favorable, no. But if it turns out unfavorable, then of course may choice ang entity na di ituloy yung contract, okay? So next we have a swap agreement. So this is actually a type of forward contract represented by a contractual obligation arranged by an intermediary that requires the exchange of cash flows between two parties. So it is actually a contract between two parties, no? Exchange payments in the future. So normally bakit siya tinatawag na swaps? Because mag-exchange lang sila ng payments, no, in the future. So other parties pay fixed and other party pays variable, okay? So what are the uses of derivatives? So normally derivatives are used for speculation or hedging. Okay, so speculation involves a trading of a financial instrument involving high risk, so an expectation of a significant returns. So the motive is to take maximum advantage from fluctuation in the market. Okay, so from the word itself, speculation, so nag-speculate ka, no, na for changes, no, sa value ng underlying over time. So parang take advantage mo yung changes, no, changes ng value ng underlying kasi you'll make profit out of it, okay? So kung nag-speculate ka ng nag-change ang nagataas ang presyo ng underlying, no, so normally you take advantage of the changes, no, or increasing price of the underlying, no? So in order to have a profit, no. Yan. Okay, so hedging naman is a way for a company to minimize or eliminate risk. So we do enter into a derivative contract, no, to mitigate, no, or mitigate or minimize or to eliminate risk. So entities engage in hedging transactions to mitigate, no, para to mitigate potential losses. So arising from volatile exchange changes, no, in the price of the underlying, such as exchange rates, no. Okay, so to mitigate the potential losses, no, normally nag-enter tayo ng derivative contract, no. Kasi to hedge is to take the possession opposite that of the transaction, okay? Okay, so what are the components of an hedging relationship? Okay, so we have two components, no, of an hedging relationship. So first we have the hedge item. So a hedge item is an asset, liability, or recognized asset or liability, firm commitment, no, highly probable transaction or investment in a foreign operation. So that exposes an entity to change in fair value or cash flows and is designated as being hedged. Okay, so yung hedge item natin are those transactions that is of course exposed to these volatile changes in the underlying, okay, such as foreign currency transactions, diba? So since the transaction is exposed, no, to volatile changes in the value of the exchange rates, diba? Okay, so ang hedging instrument naman, so kung yung hedge item no, is yun yung exposed to risk, diba? Yung transaction natin na exposed to risk, diba? Okay, so ang hedging instrument naman, these are the instruments, so as what of na na-mention natin kanina, those forward contracts, options, and swap agreement, no? These are actually the instrument na ginagamit natin to mitigate or minimize those risks. Okay, so it is general term that refers to financial instruments used by investors to offset the potential change in a fair value or cash flows of their hedge items. Okay, so ang hedge items natin are those transactions that are exposed to risk, or yung hedge instrument naman are those instrument na ginagamit natin, no? Or we entered contracts, no, in order to mitigate, no, potential losses, no, in our hedge item. Okay, so we have two types of hedge. We have the fair value hedge and cash flow hedge. So, fair value hedges are those designated to hedge the exposure to potential changes in the fair value, no, of a recognized asset or liability, no, an unrecognized firm commitment for which binding agreement exists, such as to buy or sell inventory. Okay, so basically, fair value hedge or hedge of the exposure, no, to changes in the fair value of a recognized asset or liability or of unrecognized firm commitment. Okay, so yung gains and losses natin, no, on the hedge asset or liability and the hedge instrument, kasi diba we have two components, diba, of a hedging relationship. We have the hedge item and the hedge instrument. Okay, so and we have gain and losses, no? Gains and losses on the changes in the fair value, no, of these two. So the gains or losses on the hedge asset or liability and the hedging instrument are recognized in the current earnings on the income statement. Okay, so again, sa fair value hedge, both the gain or loss, no, and the changes in the fair value of our hedging instrument and hedge item shall be taken into profit or loss, or in the current earnings in the income statement. So, ano naman ang cash flow hedge? Okay, so a cash flow hedge are those designated to hedge the exposure to potential changes in the anticipated cash flows, either into or of the company for a recognized asset or liability, such as future interest payments on variable interest debt, or a forecasted cash transaction, such as forecasted purchase or sale. So, mean to say, sa cash flow hedge is actually the hedge of the exposure, no, to variability, no, in future cash flows, no. So, yun nga, kasi may potential changes in the anticipated cash flows. Okay? So, in sa cash flow hedge, no, so the gain or loss on the derivative instrument, no, so, kasi this is actually a forecast transaction, no? So, normally, wala pang hedge item, no? So, the gain or loss lang on the derivative instrument ang ating i-take into account, okay? So, the gain or loss on the derivative instrument initially being reported in other comprehensive income. But for some, no, especially who follow split accounting, which will be further discussed in options, no? Okay, so the gain or loss of the effective portion of the hedging instrument shall be reported in other comprehensive income, okay? And then the gain or loss on the ineffective portion is reported in the current earnings on the income statement, okay? But generally, sa cash flow hedge, if silent, no, the gain or loss on the derivative instrument or the hedging instrument shall be taken into the other comprehensive income. Okay. So to summarize, okay, so we have, but basically we have four types of hedge item. We have recognized asset or liability, firm commitment, highly probable forecasted transaction, and net investment in a foreign corporation. Okay, so and we do have two types of hedge. We have fair value hedge and cash flow hedge. So yung recognized asset or liability and firm commitment lang ang pwede ma-fall under fair value hedge. Okay? So, pero, ang all four hedge item, pwede siya mo classify as cash flow hedge. Okay? Yan. And, yan. Okay, so, let's have an illustration, So, we'll first discuss muna hedging recognized asset or liability. Okay, so for hedging exposed asset and exposed liability. Okay, so we'll discuss other transactions, other hedge item in our next discussion or videos. Okay, so we have here the buyer's point of view, so, and also we are using forward contract as our hedging instrument, so we'll also discuss some hedging instrument in our next discussion. Okay, so on December 1, 2014, the Dominador company purchased inventory for $1,000 payable on March 1, 2015. So transaction is payable in dollars. So this is actually a foreign currency transaction. Okay, so also on December 1, 2014, so the Dominador company entered into the first forward contract to buy $1,000 on March 1, 2015 for 40.15. Okay, so you take note that yung hedge item natin is actually the exposed liability. Okay? Diba? Kasi since mag-purchase man tayo or mag-import ng inventory, so we have exposed liability. And then, yung hedge instrument natin is actually yung forward contract to buy 1,000 foreign currency, $1,000 on March 1, 2015. Okay, so we also have here our relevant rates. So again, for derivatives, accounting for derivatives, we do have diba hedge item and hedge instrument. And sa hedge item, normally ang ginagamit natin for hedge item are the spot rates. And then ang ginagamit natin for hedging instruments are forward rates. And diba we have two types of spot rate and also forward rate. We have buying spot and selling spot. And also have buying forward and selling forward. And diba, if based on our previous discussion in accounting for foreign currency transactions, pag it's an importing transaction, we'll use selling spot rate. Okay, and of course, if we use selling spot rate, we also use selling forward. Okay. Okay, so we'll journalize the hedge item and hedging instrument at the date of transaction, the balance sheet date, and the settlement date. So we'll first journalize the date of or the journal entries and the date of transaction. Again, diba, we have two components. We have the hedge item and the hedging instrument, and we are to journalize each. So i-journalize natin yung hedge item, which is the importing transaction or exposed liability, and the hedging instrument as the forward contract. Okay, so since our hedging instrument is an importing transaction, so we'll use spot rate. Okay, so take note that the spot rate on December 1, our transaction date is 40. no? So 40. So therefore, our entry natin is debit inventory or purchases, credit accounts payable, no? The record purchase of goods on account using the spot rate. No? That's 1,000 times 1,000 US dollars times 40 pesos na exchange rate. Okay. Okay, so we're done journalizing the hedge item. So let's journalize now or account our hedge instrument. Okay, no, the forward contract. Okay, so since ang obligation natin, no, is to buy, no, so or magbabayad tayo, no, ng foreign currency, no, foreign currency at the settlement date, no, so our hedging instrument is actually a forward contract to buy foreign currency. So since bibili tayo ng foreign currency, so we'll debit foreign currency receivable from exchange dealer, diba? At forward rates, no? At forward rate. So take note, sa hedge item we'll use spot rate, sa hedge instrument we'll use forward rate. So, and then we'll credit peso payable to exchange dealer. So, at what rate ang gagamitin natin? Okay? So, you take note that problems usually present forward rates classified as particular number of days. So, the rate to be used is the number of days remaining until the date of settlement, diba? So, since it was also mentioned that yung fixed price natin is actually 40.15, so because it's actually the 90-day forward rate on December 1. So since from December 1 to March 1, December 1, 2014 to March 1, 2015, that's actually 90 days. No? So normally ang ginagamit natin is ang remaining days, no, until the date of the settlement. So December 1 to March 1 is actually 90 days. Okay, so yan. So fixed tayo, no? So fixed tayo na ang babayarin natin is 40,150. So that's actually the locked-in price. So regardless of the changes in the value of the exchange rates, the underlying will pay fixed amount of 40,150. No? So in this case, the foreign currency receivable from exchange dealer absorbs the changes, no, in the prices in the exchange rate or the value of our underlying. Okay, so again, ang ma-receive natin is depende sa value sa underlying, pero ang babayaran natin sa exchange dealer is actually fixed. So fixed at 40,150. Okay. And if balance sheet is prepared on the date of transaction, no, so the value of our forward contract is actually 0, no, since same pa man din yung value ng receivable natin, foreign currency receivable from exchange dealer, and then peso payable to exchange dealer. Okay, so next we have the journal entries, no, on December 31. Okay, so we have our hedge item and the hedging instrument. Again, sa hedge item natin, so hedge item natin is based on spot. Okay, so our hedge item is exposed liability, diba? So pag exposed liability, of course, pag magtaas, that means loss. And pag magbaba, that means gain. So, you take note that on December 1 to December 31, nagtaas ang value, di ba, ng spot rates. Now, that's actually 40.3, that's 40, that's 0.3 times 1,000, the number of foreign currency. So, you have loss of 300. So, our entry would be a debit to foreign currency transaction loss and accounts payable for 300. Okay? So since it's always kapaltaran or opposite, no? If ang hedge item natin is liability, ang hedge instrument natin is receivable, di ba? Kasi the foreign currency receivable from exchange dealer absorbs the changes in the value of our underlying. Therefore, ang hedge item natin, pag ang hedge item natin is payable, our hedge instrument is receivable, okay? So, of course, since this is receivable, if mag-change, that means a gain. Pag magbaba, that means loss. So, ano yung forward rate na gagamitin natin? Of course, on December 1, we base our entry on 40.15, the 90-day forward rate. So, since the settlement is on March 1, so how many days left, no? Or ilang days remaining until the date of settlement from December 1 to March 1? Of course, that's 60 days. So, ang compare natin is 40.15 versus 40.40. Yung 60-day forward rate on December 31. Again, 60-day forward rate ang gamit natin is because it's 60 days no until the date of the settlement. Okay? So, we have 40.15 and 40.4. So, since nag-increase, that means gain, diba? So, na-increase tayo ng 0.25 times 1,000, no, na number of foreign currency. So, we have foreign currency receivable from exchange dealer at 250 credit, foreign currency transaction gain of 250. So, you take note that we have receivable and then that increase. So, we have a gain. Okay? So, if financial statement are prepared, no, on December 31, of course, we have foreign currency receivable of actually 40.4 of yan, yung 60-day forward rate 10 times 1,000 is 40,400, or basically that's 40,150 plus yung entry natin na 250, so we have 40,400, diba? Less peso payable natin na fix, diba? At 40,150. So, if the receivable is greater than the payable, we have forward contract na asset. Okay? Asset tayo. Okay. Yan. Kasi if mas malaki pa yung payable kaysa receivable, it means may forward contract tayo na liability. Okay? So, ang i-present natin sa FS is actually yung net na. So, depende if assets or liability. So, in this case, since malaki man yung receivable kaysa peso payable or foreign currency receivable versus peso payable, then we have forward contract represented as an asset. Okay? So, at the date of settlement, no, so, again, on the spot rate, diba, on the hedge item, we'll use spot rate. So, you take note that this a hedge item natin is a liability. So, we have decrease, diba? Nag-decrease ang spot rate. So, pag mag-decrease, then we have exposed liability, then we have gain, diba? So, yung gain natin is actually 40.2 less 40.3 times 1,000, no? A number of foreign currency. So, we have 100 na gain. So, again, gain kasi nagbaba. Okay, so you'll debit accounts payable, credit foreign currency transaction gain for 100 pesos. Okay? And also for our hedge instrument, no? So, hedge instrument natin, so, you take note that yung hedge instrument natin is receivable. Okay? So, at the date of settlement, ang gamitin natin is a spot. Okay? So, yung spot rate that is 40.2. So, you take note that at the date of settlement, both the hedge item na and the hedge instrument will use a spot. Okay? But, on December 31, diba, we'll use 40.4, the 60-day forward rate. Yan yung i-compare mo sa spot rate at the settlement date. So, 40.4 T less 40.2, no, or may 0.20 na change times 1,000. So, and then, baba tayo and we have receivable. So, it's a loss. So, you debit for current transaction loss, credit foreign currency receivable from exchange dealer. Okay? So, our next entry would be to record the payment to exchange dealer. So, diba? So, exchange dealer, fixed tayo na mabayaran natin is 41.50. The spot rate, or the forward rate rather, the forward rate at the transaction date. Okay, that's debit peso payable from exchange dealer at 41.50, credit cash 41.50. Okay, pero ang value na ma-receive natin is based on the spot rate at the transaction at the settlement date, diba? So at the settlement date, the value of our spot rate is 40.2. Okay, so yun yung ma-receive din natin. So you debit investment in foreign currency, credit foreign currency receivable from exchange dealer at 40,200. Okay? Kasi if i-account mo din yung value ng foreign currency receivable from exchange dealer on December 31, may value siya na 4,400. And then, di ba we have recognized 200 na loss. So, yung value na lang niya is 40,200 or is actually equal to the spot rate. No? That's 1,000 times 40.2 or 40,200. Okay? So, also, since sa hedge item, no, may payment na tayo. Okay? Settlement tayo with debit. Accounts payable, credit cash for 40,200. Then, we'll record na the receipt, no, of foreign currency from the exchange dealer. We'll debit cash, credit investment in foreign currency. No, you can actually record this as one transaction. No? You debit cash, credit, foreign currency receivable from exchange dealer. No? So, you don't need to debit investment in foreign currency for the receipt, no? And also credit then investment in foreign currency for the collection. Okay, so that's the exposed liability. Exposed liability. What if now we are in accounting in the seller's point of view and we have exposed asset? Okay, and using yung forward contract as an hedging instrument. Okay, so on December 1, 2014, Jose Company sold merchandise for $1,500 to be collected on March 1, 2015. Okay, the transaction is payable in dollars. Okay, so also on December 1, 2014, the company entered into first forward contract to sell, diba, $1,500 on March 1, 2015 for 41.25. Okay, so again, 41. Okay, so that's actually 41.15 pala, no? Okay, so yan, ito yung 41.15 kasi that's the 90-day forward rate. Kasi it's 90-day from December 1 to March 1. So we'll use 90-day forward rate. It's 41.15. So again, if we have exporting transaction, of course, we'll use buying spot rate. No, and since our hedging instrument is forward contract to sell, no, so we'll have buying forward rate. Also, we have buying forward rate. Okay, and so how do we record this transaction? Okay, so again, ang hedge item natin is an exporting transaction. Okay, we have exposed asset. Okay, exposed asset. So since we have exposed asset, no, we have receivable, diba? We have receivable. So and we use spot rates. So changes in spot rates, no. So pag mag-increase yung spot rate, then that's a gain. Pag mag-decrease yung spot rate over the time, that means loss. And our hedging instrument is actually a forward contract to sell foreign currency, diba? So since we are to sell foreign currency, no? So fix yung ma-receive natin. We have peso receivable from exchange dealer, and then mag-vary yung babayaran natin, no? So fix ang ma-receive, mag-vary ang payable to exchange dealer. So since foreign currency payable to exchange dealer ang mag-absorb sa changes sa values underlying, therefore our hedge instrument is a payable. Okay, diba, it's always kabaliktaran. So if our hedge item is receivable, our hedge instrument is payable. So that's why kabaliktaran then when we analyze the changes. Kasi sa hedge instrument, kasi nga it's payable, then pag mag-increase that means loss, pag mag-decrease that means gain. Okay, so to record the hedge item, of course, diba, we'll use spot rate. Okay, so will debit accounts receivable credit sales at the spot rate at the transaction date, which is 41. Okay, so debit accounts receivable credit sales for 61,500. So record the sale of goods on account using the spot rate on December 1. Okay, so hedging instrument naman, no, so will debit peso receivable from exchange dealer, and then credit foreign currency payable to exchange dealer at 61,725. Okay, so 61,725, that is actually the 15 times 41.15. Okay, that's peso receivable from exchange dealer, debit credit foreign currency payable to exchange dealer at 61,725. And if financial statements is prepared on December 1, 2014, okay, the forward contract has a zero value. Okay, since same at this point in time, no, same pa yung peso receivable natin and saka foreign currency payable to exchange dealer. Okay, next we have on December 31. Okay, December 31. So on December 31, of course, ating balance sheet date, so we'll account for the changes in the spot rates and forward rates, no? And of course, we'll recognize gain or loss in the hedge item and the hedge instrument. Of course, since this is an fair value hedge, no? The changes in the fair value will be taken into the profit or loss or the income statement. Okay, so at the hedge item, no, so we'll compare, and we have 41.3 on December 31, diba, and 41 on December 1. Okay, so 41 and 41.3, so nag-increase. So since this is an exposed asset, okay, so pag mag-increase, that increase, that means gain, diba? Okay, so that's actually 41.3 less 41, or that's 0.3 times 1.5, diba? 0.3 times 1.5. Okay, you have debit accounts receivable, credit for currency transaction gain at 450. Also, on the hedge instrument, again, diba, sa hedge instrument, we have payable, foreign currency payable. And then, i-compare natin, of course, we have 90-day forward rate on December 1 and 60-day forward rate on December 31. Again, it's 60-day forward rate ang gamit on December 31 kasi it's 60 days after the settlement, or yung settlement date natin. Okay, so let's have 41.15 and 41.4. Ito yung compare natin, 41.4 and 41.15. Yung 90-day forward rate on December 1 and 60-day forward rate on December 31. Okay, so since this is payable and of course nag-increase, then it's a loss. That's foreign currency transaction loss. And then, diba, say foreign currency payable to exchange dealer ang mag-absorb ng gain or loss. Okay, so record the foreign currency loss, no? So we have foreign currency transaction loss at 375, credit foreign currency payable to exchange dealer at 375. So again, that's 41.40 less 41.15, diba? Yan, 41.15 sa 90-day forward rate, tsaka 60-day forward rate December 31. Okay? So, 375. Okay. So, for balance sheet preparation, so since we have foreign currency payable of 62,100 and peso receivable of 61.725, of course, we have payable greater than receivable, so therefore the forward contract is a liability. Again, so since yung payable natin is greater than peso receivable, so i-present natin sa balance sheet na value na forward contract is 375 payable. Okay, so we're now accounting for the date of settlement, of course. So date of settlement in our hedge item, take note it's AR, so that's 41.3 and 41.2, so nag-decrease siya by 0.10, of course, times na 1.5 na for foreign currency, so therefore we have a loss. So that with foreign currency loss, credit accounts receivable for 150. Okay, and then for hedge instrument, yung payable, foreign currency payable, so compare natin is 41.40 and 41.2. Yan. yung spot rate on March 1 na settlement date, and then the forward rate, 60-day forward rate on December 31. Okay, so since nag-decrease, that means a gain. Diba? Nag-decrease din siya. So, debit foreign currency payable to exchange dealer at 300, credit foreign currency transaction gain at 300. Okay? Also have another entry, no? So, since this is a date of settlement na, so ma-receive na rin yung peso receivable. So, fixed na peso receivable, di ba? Fixed ang ma-receive, mag-vary ang bayaran. Kasi, since we are to sell foreign currency, no? Yan siya. Magbase yung mabayaran natin based sa value ng, or the spot rate at the settlement date. Okay, so, or magdepende yung makollect natin, di ba? Based sa spot rate on the transaction date. Okay, so we'll debit foreign currency payable to exchange dealer at 61,800 and credit investment foreign currency at 61,800. Take note, this is actually the based on spot rate. That's actually 1.5 times 1.2. No? Yan, in our hedge items, we'll debit investment in foreign currency at 61,800 and credit accounts receivable for 61,800. Okay. Okay, so that's our journal entries at the date of transaction, the balance sheet date, and the settlement date. And we're done with the transactions on the recording hedge item and hedge instrument in hedging recognized asset or liability. So we'll have further discussions in accounting for derivatives and hedging foreign currency transactions on our next video. So thank you.